What's going on, twins? What's going on, twins? It's been a minute. It's been a minute. I actually I audio recorded this video live. Like I was talking while I was like in this trade. Uh, but like it just sounded bad and fucking. Like I don't know. Like also like the video was so fucking long. Like it was like almost 30 minutes. I feel like. So it's kind of like if you make the live recorded videos, it just takes too long. But anyways, what's going on? So here I am looking at the Nasdaq, looking to go long in the Nasdaq. The time of this trade is very important. It's the 8:30. So that green box that you see right now, that price is in right now. That is what made that was the 8:30 candle. Okay. It is also the same exact price as the midnight open, which is rare. It's rare to see that. It was kind of interesting, kind of like a first time for me to see that. But for me, it told me that price was oversold because it was at the midnight open and it did below the midnight open. So that's what told me it was oversold. It did below the midnight open 8 hours after the open. So then it had a shift in market structure. Man, I wish I could like draw and point things out, but the swing high to the left of the green box, as you can see, it breaks it. It shifts the market structure. It goes up to a premium array. You can see where price goes to the green box on top. You can see it. That's a sell side imbalance, buy side inefficiency. I know it's kind of hard to follow with my fucking screen moving the whole time, but I don't know. The audio recordings after the video, I feel like are better in some ways. I don't know. Because like I can really break it down, but it's hard to like fucking follow. See, like here I'm explaining everything in the video like real time, but it's just it was just too long. I had to cut it and do it this way. But anyways, my entry is at the top. Now, why did I choose that buy side imbalance and sell side efficiency rather than the one that's right above it? Well, because I want to get into price when it's at a discount if I'm seeking higher prices. You don't want to buy. It would be like trying to sell a house that you paid $100,000 for $105,000, rather than waiting for the house to go on sale at $85,000 and then selling it at $105,000. You know what I'm saying? Like, that has to make sense. It has to make sense. Anyways, so I waited for price to come back down. It did. Then you can see on the screen how the candles come to an abrupt stop. I think you'll see it right now. You can kind of see it right there, but that's not what I'm talking about. Okay, I think it happens right here. But anyways, so right now I'm circling around some good places to take partials if my trade moves in that direction. I don't know what I must have been talking about here, but yeah, just watch the damn trade. Oh, and then I outlined that order block. See that? So price uses order blocks and fair value gaps, and you couple them together, and you get even more insight as to why these reactions are happening in the market. Nothing is random here. Nothing at all is random. It's all reacting or seeking something. It's like it just never stops. It's fucking insane. Well, it stops on the weekends when they close, but when it's open, it's all fucking. Like it's just all the whole time crunching numbers. Like the algorithm is just fucking working the whole time, and you can see it here. So and the reason where I initially got my higher, like my bias, like why did I want to buy? Okay, well it comes from the top down. So you go on your daily chart, and I wish I could show you guys here. that's the benefit of the live recordings. I'm just gonna start doing those, I think, and I don't know, maybe like breaking up in like multiple videos or something. But the higher time frame gives you a bias, and then you go from your day to your 4 hour, and then your 4 hour will give you even more insight, like more patterns and more price action to confirm whether your initial higher time frame bias was correct. And then you break it down from the 4 hour to the 15 minute, and the 15 minute is your bellwether, and then that gives you even more. The 15 minute, you start shifting from bias to targets. So the 15 minute helps you identify. Okay, here, zoomed in here. Okay, see how the white candle stops abruptly at the consequent encroachment of that fair value gap, the middle, the purple line right there, the consequent encroachment. Boom, you see how it stops right dead in its tracks, and then look at the reaction of price after it hits the middle of the fair value gap. See how it's strong, and it's like saying like it's like, I don't know, stopping dead in its tracks. That's the only way I can explain it. It's like it hit the middle of the fair value gap, and then it said, no, I'm going to move this direction now, bitch, no matter what you say. Okay, so now, like that, seeing that alone gave me more confidence that price was going to go higher. And then but right now I'm only trading with one contract, and I have the ticks on, but it's hard to measure like when a good time to get out is if I have the ticks on, because I'm not used to the fucking ticks. But I'm gonna start using the ticks more, because it's like messes with psychology, like looking at the money. Like it's just fucking, it's weird. It's like puts extra pressure on you when there's like money symbols on this shit. I mean, it's I guess fun, but I'm trying really hard to take the fun out of my trading. You know what I'm saying? Like this should not be like fun. It's fun because I'm learning it, but it should be more like a business. You know what I'm saying? Like a business model. You know? I'm just kidding. But how does the mic sound? Let me know. Let me know. But yeah, and then so what I'm circling right now is higher time frame, so 4 hours and daily fair value gaps, which I believe is going to be traded to in this day, because I just got done with the trade, but the markets are live right now, and I think price should go down there and react off of those. If it wants to send price higher, it may not do it today though. Either way, I'm still looking for longs and longs only, and here a long presented itself. As fate shall have it, a long presented itself. When I say a long presented itself, I don't know why I said that. When I say a long presented itself, like my setup presented itself, and not just my setup, multiple setups were shown at the same time. It's just hard to explain without actually drawing on it live and showing you guys where to look. But yeah, like for one contract, in my opinion, every time it gets near $300, you should take it off. Because why? Like, why would you hold a contract longer? Like, okay, if you were trading one contract, you should take it off at or around $300, because why would you not pay yourself? Like, why would you just wait for price to turn back on you? And I don't see that as, well, here I move it here, because this is another discount rate. This is another spot that price can, this is another catalyst that can send price downwards. Now, it's not always going to do that, obviously. You'll see in this video how it continues higher, but it's a good place, since I'm just trading with one contract, to take it out of the marketplace, pull that money from the marketplace, and then watch your ideas pan out. So, you're getting, at the same time, you can continue practicing and pull money out of the market safely and quickly. And that's really all I'm trying to do right now. A couple years down the road, I'll get better at this. Now, look at this, like, kind of large downside candle. Here I reduce my risk, which is, I already have a super tight stop loss. That's kind of how that's kind of the trading style I have, I think, which it's kind of frowned upon. I think a lot of people like wider stop losses because it increases your win rate, but it also makes your losses bigger. You know what I'm saying? So for me, I think keeping your winners bigger than your losers is pretty important. Now here I'm just taking, like, this is a small win. This is like a $300 win here, but which isn't much in like the grand scheme of things. There's billions of money flowing through these markets. $300 is like fucking a penny compared to some of the hedge funds that are trading in this marketplace that I choose to participate in. That's why it's like it can be like heavily manipulated, because people with a lot of money can manipulate markets. Obviously, like they got to make their money somehow. You know what I'm saying? They're not gonna risk $10 million. You know, there's gonna be manual intervention to make sure price goes where it needs to go. But you can. The cool thing is like, you know when those are coming. They're called news events, like red folder news. Like those are big volume injections or easy times to manipulate the market without the people noticing, because they're like, oh, it's just news. Yeah, price delivers pretty nicely here. Like there's a good amount of continuation. Like price is doing what it's supposed to be doing here, and it's not always like that. Sometimes it just goes back and forth, back and forth, back and forth, and it's called being chop. And when it's like that, it's important to identify that you're in shitty environments and like just stop trading until another session or maybe the next day. But right now, at this moment, it's not like that. So I stayed in the trade, and worked out well for me. And I want you to keep in mind, the original target that I had was that swing high right there, just to the left of where my take profit is, just to the left, that swing high. That was my original target, and just keep that in mind. Man, this video is dragging on, but it's just how trading is. Sometimes it takes a while to fucking... that's another thing. Like, I don't want to rush my trades or rush my exits because of the sake of the video. I'm just going to have to get better at editing. Because YouTube is just like a thing that I can share, like, what I'm learning. But it shouldn't be, like, my main objective. My main objective should be practicing what I've been taught. And just getting repetitions at it. That's all I've been doing this whole year. I started in January. It's now fucking September. It's crazy. I'm figuring some stuff out. I'm still not at that elite level yet, but you can call me a beginner trader now, I'd say. There's no bullshit. There's no cap in my game. You know what I'm saying? There's no cap in my game. Like, I'm just doing what I'm made to do, what I'm born to do. You know what I'm saying? It's called make money. And I'm excited though. I'm excited to keep learning. I'm excited to start using real money. That's it. That's the whole trade right there. You know what I'm saying? That's it. That's beautiful delivery to the upside. As you can see, it goes to the discount, climbs, seeks higher prices, relative equal highs. But this is all extrapolated from higher time frame biases. You can't just look at the lower time frames. I guess you could, but you get more reassurance with the higher time frame biases every time. The video skipped to the next clip. As you can see, my original target gets banged out. Pause. Gets banged out. As you can see, like, the order blocks being used to propel prices higher. It's not always the fair value gaps that send. It's the fair value gaps and the order blocks and time and liquidity that moves the markets. And I don't know. It's kind of a lot of things to keep track of. Like the more I do it, I don't want to say the harder it gets. It's like the more I'm learning, the more like I guess complicated. It's not as simple as I thought it was when I first started trading. Like when I first started looking at price last November, almost a year now. I thought it was a lot more simple than this. Let me tell you. Thought it was a lot more simple, but it's still, it's not like super complicated if you find a model and you stick to your rules and you stick in front of the charts and you stay up to date with price and big events in the world. It's not it's definitely not impossible. And I just showed you right now, like, I'm saying it's an easy day, but doing consistently over time, that's where they get you. That's it for this video, though. Let me know what you guys thought. Give me some feedback. Let me know. Let me know what the mic sounds like. Let me know. All right. See you guys tomorrow. Peace.